Howdy, everybody. Welcome to Liberty Call. Today is Wednesday, June 5th, 2024. Hope you're having a fantastical day out there in the interwebs. It is a beautiful day here in Colorado. Sun's out. There's not a cloud in the sky. It's a little warm upstairs because I don't have air conditioning on the main level of my house. So it's nice and cool down here where all the offices and extra bedrooms are. So anyways, like I said, hope you're having a great day out there. And if it is your first time watching Liberty Call, yes, let me point to the right spot. Yes, if you could do me a favor, give me some thumbs up, a like, a share, subscribe, a follow, and press that notification bell. All righty. Well, it looks like the markets were in a good mood again today. Again, I don't know why. I mean, the economy's a mess. The government's a disaster. We have too much debt. But hey, people are still putting money into the market. So let's go ahead and see what's going on there. All right. Dow Jones was up 0.25%, 96 points. Closed at 38,807. The S&P 500 was up 1.19%, closed at 53.54. Nasdaq up 1.95%. Ooh, big jump today. Closed at 17,186. The VIX fell 4.03% today. It's at 1263. Canada up 0.76%. Brazil down 0.35%. And Mexico up 1.86%. So it's making back some of those losses from, I guess it was Monday. I guess, everything I've been able to ascertain, it just had to do with the election. I guess everybody was worried that, because this new president is coming into office, and the fact that, it's a woman and, her background, some people are a little itchy about that. So I'm going to stay out of that for now. All right. Heading over to Western Europe, Germany was up 0.89%, the UK up 0.18%, France up 0.87%, the Netherlands up 1.88%. Spain up 0.59%, Italy up 0.68%, Switzerland up 1.16%, and Portugal down 0.18%. Russian exchanges both in the green again today. The MOEX up 0.89%, the RTSI up 0.9%. And the Asian markets, the Nikkei was down 0.88%, the Australia was up 0.41%, New Zealand up 0.2%. In China, the Shanghai was down 0.83%, the Shenzhen component down 0.8%. China A50 down 0.44, DJ Shanghai down 0.88, Hang Seng down 0.1%, and the Taiwan weighted was up 0.6. You see my main man Jake here. He is super. He's getting all stretched out. It's like, ooh, markets are running. All right, let's go ahead and move over to the market recap for today. Nasdaq rides tech to all-time highs as rate cut bets jump on weaker data. Woo! Little bit of bad news, and everybody's thinking that the Fed's going to cut rates. Don't hold your breath, folks. Something bad's got to happen first. That is usually the first. I mean, the Fed just doesn't lower rates for the sake of lowering rates. So they're going to need something. They're going to need a catalyst, and whether or not that's the economy, the job market, the stock market, a combination of all three, which is probably what I imagine it'll probably be. But we shall see. All right, let's get into the recap here. The Nasdaq achieved a new record high driven by strength in the tech sector and declining treasury yields. This was fueled by indications of a further slowdown in the labor market, raising expectations of a potential interest rate cut by the Federal Reserve later in the year. Yeah, remember they were going to do 6? I think that was the number we were hearing last year. The continued decline in treasury yields was attributed to the increased likelihood of a rate cut following data showing lower than expected creation of private sector jobs in May. The market's anticipation of a 25 basis point reduction in September has risen to about 65% compared to below 50% a year earlier. Yeah, 25 basis point. Is that really what's going to save the economy and the markets, is a 25 basis point cut? I mean, seriously, if you think that's all it takes is to fix everything, is just lowering rates 0.25%. Makes me laugh. Amid signs of cooling in the labor market, big tech companies such as Apple, Alphabet, and Microsoft experienced upward momentum. Additionally, the rally in the market was supported by the performance of chip companies like NVIDIA and Taiwan Semiconductor Manufacturing, with Barclays raising its price target on NVIDIA stock, leading to a significant increase in its market cap. In the earnings arena, Hewlett-Packard and cybersecurity firm CrowdStrike saw notable surges following strong quarterly performances and optimistic outlooks. However, Dollar Tree experienced a decline in its stock price after reports of potential strategic actions related to its Family Dollar brand. Energy stocks attempted to stabilize after recent losses, despite U.S. industry data indicating an unexpected build in oil inventories. The unexpected increase in crude inventories was lower than estimates, but still impacted the energy sector. Overall, the market's optimism was driven by the potential for a Federal Reserve rate cut, the performance of tech and chip companies, and the outcomes of various earnings reports. These factors contributed to the Nasdaq's record high and the broader market's positive momentum. Yep. Exciting stuff, I know. All right. Up next, some data, the May ISM Non Manufacturing Index. So let's go ahead and read through this. This was prepared by Nate Gersey, economic analyst at First Trust. Let's see what Nate had to say. All right. The ISM Services Index rebounded to a 9-month high of 53.8 in May, surpassing even the most optimistic forecasts. This increase was driven by significantly higher business activity, which reached 61.2 in May, matching its highest level in 18 months. Additionally, the index for new orders climbed to a solid 54.1, marking the 17th consecutive month above 50. This contrasts with the manufacturing sector, where new orders have contracted for 19 out of the last 21 months. Despite the strength in the services sector, the labor market remains subdued, with hiring contracting for the 5th time in 6 months. Companies are reportedly delaying filling vacancies due to a desire to control labor expenses and uncertainty about the economic outlook. Furthermore, inflation remains a significant concern in the services sector, with prices continuing to rise. 14 industries reported higher prices, while none reported lower prices. The persistent inflationary pressure in the services sector poses a challenge for the Federal Reserve. In other economic news, ADP's measure for private payrolls increased by 152,000 in May, falling short of consensus expectations of 175,000. Additionally, car and light truck sales in May reached a 15.9 million annual rate, representing a 0.8% increase from April and a 2.5% increase from a year ago. The non-manufacturing ISM index for May showed a notable improvement, with the composite index reaching 53.8, business activity at 61.2, and new orders at 54.1. However, the employment index contracted to 47.1, indicating ongoing challenges in the labor market. The prices index also remained elevated at 58.1, reflecting persistent inflationary pressure in the services sector. Overall, the rebound in ISM Services Index, coupled with insights into the labor market and inflation, provides valuable indications of the current economic landscape and the challenges it presents. All right. One last article from Zero Hedge has to do with labor. ADP payrolls unexpectedly tumbled the lowest since January as wage growth continues slowing. All right. In May, the U.S. added just 152,000 jobs, according to the latest report from ADP. The figure represents a decline of 36,000 from the downwardly revised March number of 188,000, marking the lowest level since January. The results fell significantly below the median consensus of 175,000. Upon closer examination, weak spots were evident, with manufacturing and mining jobs experiencing a sharp drop in the goods-producing category. There were also further job losses in highly paid information and professional services. On the other hand, the largest gains were once again seen in the lowest paid education and health services sector. Additionally, job losses were observed in the Pacific West region and among small companies with 20 to 49 workers. ADP's chief economist Neela Richardson confirmed that job gains and pay growth are slowing as the labor market heads into the second half of the year. She noted that while the labor market remains solid, there are notable areas of weakness tied to both producers and consumers. Wage growth continues to slow for job changers, with a 7.8% increase in pay in May compared to 8% in April. Wage growth for job stayers remained unchanged at 5% for the third consecutive month. It's worth noting that ADP's headline data has underestimated the Bureau of Labor Statistics report for 8 consecutive months until this report, which modestly beat expectations. This report comes just 2 days ahead of Friday's BLS data release. The market's reaction to this news reflects a dovish sentiment, with yields falling to session lows. While traditionally ADP has had limited signaling power for more than a significant non-farm payrolls number, the market is starting to anticipate a potentially significant downside surprise in Friday's report. This expectation has raised speculation about the possibility of rate cuts by the Federal Reserve, potentially as early as July or September. Again, not holding my breath. I think we're going to need some sort of, negative situation. Again, the market collapses, jobs, unemployment just, goes way, way, way up quick. I don't know what would be the catalyst to that. I don't know if it's going to be another super flu or some ridiculous thing that everyone in government and the media freaks out about, but who knows? All right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. I hope everyone has a wonderful evening, and I shall talk to you again next time. Adios.